You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 7/13/21. Well, what does 2022 have in store for you? What is transitory inflation? Are cryptos still the place to be? And what about the residential real estate market outlook? Those are the themes. Those are where we're looking at for investing, in quotes, for the coming year. And you need to be looking ahead because whatever is going on now, postpartum blues, whatever the post-lockdown blues, well, right now things are booming. I was recently in Las Vegas. The place was packed to the gills. People are back on airplanes, and it seems like the country is quickly becoming a mask-free zone. There's nothing wrong with that. Well, here with us today is Naresh Vissa. And of course, he is founder and CEO of Krish Media and Marketing. And if you've got a question for either one of us, especially in light of what we're about to say, I want to hear from you. So send an email to kl@kerrylutz.com. Naresh, great to have you back on the show. It's been a while. So tell us, where do you see things shaping up for 2022?
Well, Kerry, first off, pleasure to be back on. Love coming on your show. Love hanging out with you, just like we did in Cuba, December 2016. And what do you know? You see out on the streets, free Cuba, and they're fighting for their independence, which I don't think is going to come. But great trip that we had back then.
Yeah.
And look, as far as 2022 goes, speaking of Cuba, we've seen a ton of government spending in not just 2021, but even when we had a different administration, different regime in office in 2020 and before, going all the way back to even President George W. Bush, we saw more and more spending. And so what does this all mean? What's going to happen? I'm actually very optimistic. I'm not sure. I've listened to some of your previous episodes. I don't think you're as optimistic as me. I think 2022 is going to be an incredible year when it comes to GDP, spending, jobs, unemployment. And the reason why is because right now there is a labor shortage, a severe labor shortage, in the sense that there are a lot of job openings. And there are even more people who just don't want to work. They want to sit at home and collect their unemployment or take a break. So the jobs are there. They're absolutely available. And this is evidenced by the rise in wages. For the first time in decades, we're seeing I don't want to call it a significant, but we are seeing a noteworthy rise in wages. If you look at Chipoltle, for example, the average salary for a Chipoltle employee was about $10 to $11 an hour just 2 years ago. And in a matter of 2 years, Chipoltle changed their business plan, changed their business model, have a employee training program where you can make upwards of $100,000, six figures, within 4 to 5 years. And the starting salary is $14 to $15 an hour to make burritos at Chipoltle. At McDonald's, they've raised their wages across the board. Here where I live in Florida, they've gone from paying $9 to $10 an hour to $12 to $13 an hour. So it's not just in those lower level fast food joints where we're seeing a rise in wages, but we are also seeing them in more corporate jobs, because there are many plentiful job openings in corporate, in tech, and engineering, everywhere. Job openings are everywhere. If you're listening to this show right now, to this episode, and you're at home and looking for a job, right now is when you want to be looking for a job, or when you want to jump ship. If you want a promotion elsewhere and your current employer is not giving you a promotion, start looking elsewhere, because here's another thing. President Biden signed an executive order last week getting rid of non-compete agreements. So he sent that to the FTC, and by the end of August, the FTC should approve it. And most, I'm not saying all non-competes, I've looked into the bill a little bit, and most non-competes should become moot, which means you as an employer or an employee, you're free to shop around and look around and leave without the fear of being sued.
Well, I happen to, my past life as an attorney and entrepreneur, business owner, knew a lot about it. In New York, basically, they're unenforceable. In many states, they're unenforceable. But in places like Florida and the South, they're very enforceable. There are certain jobs where it's probably appropriate, but most jobs definitely not. And it can make it very difficult for an employee who wants to change jobs. Hey, backtracking a little bit. So Chipotle, you know what's happened here? We have this company, Chick-fil-A, which has become probably the most successful fast food operation on the planet. And they pay their employees $15 to $20 an hour and higher. And that's for basically slinging Chick-fil-A sandwiches, chicken sandwiches. And what they found is that the owners, the franchisees, are making higher profits than any other fast food outlet out there, because you go to a McDonald's, and granted, I haven't done it in a while, but the way it used to work was you'd never see the same person there twice. Or if you did, it was for a very short period of time, and they'd hold out the carrot. Well, one day you can become an assistant manager if you play your cards right. And there's only room for so many of them. So it's churn and burn. And what Chick-fil-A proved was that if you pay more, will cut your costs dramatically, because every time an employee leaves and you got to hire a replacement, guess what? You're looking at higher training costs, you're looking at higher waste, you're looking at lower productivity. So by maintaining stability in your workforce, there's tremendous benefits. So somehow all these other fast food places have gotten religion, and really, I think this applies across the board to businesses. If you have high turnover, high employee turnover, you're going to have higher costs, even though you pay your individual employee less money. You wind up paying for it in terms of turnover.
Well, I actually have several friends who grew up in families that did very well in the fast food space: McDonald's, Subway, sandwiches, Burger Kings. And what you said is the biggest challenge for them. It's not making the sandwiches, but it's the high turnover. They get someone in, and 2-3 months later, they're gone. And they don't even put in notice. So these are low-wage employees. Many of them English is not their first language, at least where I grew up in Texas. And they just disappear. They just don't even show up to work, and boom, who's got to go show up? The owner's got to go show up and run everything for a couple of weeks. So it certainly, I think this is a good thing for the businesses, in that, yes, they are spending more money, but it could end up evening out. They are spending more money on wages, but it could end up evening out when it comes to retention and having formal programs like this. So I think Chipotle is going to do very well. The business, the stock, CMG, I think is going to do quite well as well because of these changes. It's at all-time highs right now. So we'll see. But going back to the labor force in 2022, the economic forecast, I think we're going to reach full employment by the end of 2022. The unemployment rate is going to tick down. And this is largely because the country is going to be open. It is still starting to open up. We have some scares here and there with different variants, but mentally the country has moved on. And so I do think that the stock market will continue to do well. I think people are going to get back in the workforce, and they're going to be spending money as well. Already you see it. You've taken a few trips. You said you were in Vegas. I've taken a couple of trips with my wife, and the hotels are packed. The resorts are packed. The restaurants packed. So 2022, I still do believe it's going to be a great year for the economy as a whole. But at the same time, I want to go back to the impact that what I call the Great Resignation. So already I brought up that people are staying home. They don't want to go back to work. There are all these job openings, and people are quitting left and right because they realize, hey, I don't want to go back to the office if they work at really anywhere. Let's assume Chipotle is an office. I don't want to go back to the office, or if they're a corporate job, the banks are asking people to come back to the office. Consulting companies asking their workers to come back to the office. So people are realizing, I don't need to do that. I can stay at home and not collect unemployment because states are pulling back on that, but start my own business or get a remote job. And more of those jobs are available or are becoming available. So I think with this latest executive order where they're essentially trying to get rid of most non-competes, you're going to see employees be like, oh, I'm not afraid anymore, even though most non-competes are just there to scare the employee. They're going to say, oh, I'm not afraid anymore, and I'm just going to go out and find another job or start my own business that's going to compete with this current business. And I think that's going to have a major impact and help the economy overall as well, and not just in 2022, but moving forward. If we look at Silicon Valley, I'm not a big fan of most of the regulations in California, but they're getting rid of non-competes in California decades ago. Really helped spur innovation and encourage people to leave their employers, move on to competitors, or start their own businesses. And now we have Silicon Valley, which is what it is today.
Yep, that's very true. So, yep, it's definitely looking up as far as employment goes. But with a booming economy and all that, we're getting this inflation because we've printed up trillions of dollars in new currency units. Productivity has not risen apace with money supply. And we've seen tremendous inflation in real estate, obviously in the capital markets, stock markets, artificially low interest rates. What do you think is going to happen here with inflation and all that?
Don't just survive, thrive. The Financial Survival Network.
Arcana Corporation is on the verge of bringing the world's highest grade silver mine into production. The Revenue Virginius mine in Colorado has proven improbable silver reserves grading nearly 37 ounces per ton silver, with an all-in sustaining production cost of only US $8 per ounce of silver. The mine is fully permitted with infrastructure already in place, and the company has announced they plan to commence production in 2020. Achieving successful production usually results in a significant upward share price re-rating on the Lassonde curve. Arcana trades under the ticker AUN in Toronto and AUNFF in New York. To learn more, go to arcana.com. That's AURCANA.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, I think you called it transitory inflation at the beginning of this episode, and that's what I think it is. I don't think this is going to continue. The U.S. goes through cycles once every few decades where there's transitory inflation. Let's say on a scale of, let's take wages, for example. So let's say we're back in the 90s and you're making minimum wage is $5 an hour. And then the Great Recession hits and we see transitory inflation where minimum wage goes up to $10 an hour. And then now the pandemic hits, all this government spending worldwide, and minimum wage goes up to $15 an hour, like they're doing at Chipotle. What I'm saying is there's this rapid transitory inflation, and then it just stops. That's kind of what's happened. So I don't expect wages to continue to increase. I don't expect many asset values to continue to increase at the pace that they have been increasing. So take residential real estate, for example. Our home is up 40% in the last 2.5 years. So let's just say 30 months. Our home is up 40%. Just over the past year, our home is up over 25%. Just over the past 12 months, up 25%. That's not going to continue. I'm not saying there's going to be a crash or there's going to be a decline, but it's going to stagnate. It's going to level off. And so I see that across the board where we've seen this huge run up in almost anything money related, the value of almost everything. We've seen this huge run up so quickly, but I think we're going to see stagnation by the end of 2020, almost like a sense of normalcy by the end of 2022. But what does that mean for the asset price? That means it's still more expensive than it was, 2 years ago, 3 years ago. Like I said, that nothing's going to crash to pre-pandemic levels. I don't think. That's just where I see things. And so what does this mean? Like, where should you put your money? Well, I think if you owned assets before all this, congratulations, because you have seen appreciation in nearly every asset class, including cryptocurrency. So good for you. You've made money. But I actually think personally, if I didn't own anything pre-pandemic, which I did, I owned stocks, crypto, real estate, land, jewelry, gold, a few other items. But if you didn't own anything, then your question is, okay, well, where should I put my money? Like, I don't want to, the local bank, they're paying out 1% in CDs, or the online bank is giving you 1% in a CD. I don't want to put my money there. What should Well, I do think that, you've missed a boat on real estate. You're going to have to wait until rents catch up to the asset values, to the prices. And they are. The rents are going up, but they have not caught up. It's going to take at least another year for rents to catch up. So I don't think real estate, at least the residential market, is where you want to be. There might be some distressed commercial properties that you would want to take a look at. And then as far as the stock market goes, as we speak today, it reached all-time highs. It's continuing to reach all-time highs. And I brought up the whole stagnation. So at some point, the stock market, there will be a correction. And worst case scenario that I see is some kind of stagnation between Dow 35,000 to 40,000, just trading up and down. So do you want to be in stocks and deal with the volatility, or just the sideways market of that? I'm not really sure. So I'm actually still very bullish on cryptocurrency. And I only became I was bullish last year in 2020, throughout 2020. I was bullish in early 2021. And now I am bullish in the sense that I think there is going to be another major correction in cryptocurrency where it dips below, where Bitcoin, the price of Bitcoin dips below $25,000. And I think that will present a truly amazing, tremendous, once in a lifetime buying opportunity at Bitcoin below 25,000, because Bitcoin is digital gold. More institutions, in fact, almost all major financial institutions are adopting Bitcoin, whether it's in their transactions, whether it's in their research departments, their trading desks, as an asset to offer their clients. It is picking up adoption very, very quickly. It is being integrated in businesses very, very quickly. So I'm very while in 2022, at some point, I think cryptocurrency would be a very, very good wealth preserver.
Well, I'm going to take issue with you on a little bit on that.
Sure.
I knew when Bitcoin hit 65.5 that it hit its peak. It was the mirror image of 2017, but it hit its peak of 19.7. And I'll admit, I didn't see it going up to 65,000, but it became obvious that it was in a parabolic move. And all parabolic moves end the same way, and that is with a bust. Now, the question is, will it stay above 30,000 or 32,000? If it doesn't, it could go down to 20 and then 17 and potentially 6,000. Now, I'm not telling you not to buy it. I have a small crypto account that I'm holding on to, but and I continue to buy more, especially Ethereum. But I don't think this is going to be a good year for it. I think it's going to set up and it'll go over 100,000. But we have a pattern of Bitcoin, and so goes Bitcoin, so goes cryptos for the time being, where you have this halving thing where less than half of new Bitcoins are mined, and that has invariably led to a crash. I know about all the acceptance and everything else, but we haven't really seen governments put their foot down yet, and they very well might. That's not saying not to buy it, just saying from the technicals, it's just not the best time it might be a good time to average down, but I don't think you're going to be averaging up for a while.
Well, that's why I said I gave that number of Bitcoin 25,000. So right now, if somebody came to me and said, where should I put my money right now at this minute, I wouldn't advise cryptocurrency. But there are some ancillary crypto stocks that I think are worth checking out. And when I say crypto stocks, I'm not talking these small caps that will go bankrupt if Bitcoin goes bankrupt, but I'm talking about large corporations, household names like Apple, Tesla, Visa, MasterCard, Facebook. These are big companies that have invested quite a bit. PayPal, even the big banks like JP Morgan, they've invested tens of millions of dollars into cryptocurrency, whether it's buying the asset or figuring out solutions to better adopt the asset. So if you want to be a little more risk averse, you can invest in those companies because it's just going to be a slight dent if crypto were to go bankrupt. But like I mentioned, Bitcoin 25,000, that's my point to start, like you said, dollar cost averaging on the way up or on the way down. And in crypto, you said 100,000. I think you said you expected to reach 100,000 at some point. I do too. I don't think it's going to happen this year, and I don't think it's going to happen next year either. But the question is, if you have money, where should you put it? And I made the case against residential real estate because the asset value has gone up so much and rents haven't caught up. I made the case against stocks because those have reached all-time highs and I expect a stagnation. And there's not really much else for the common man to invest in after that, which is why I think more people are going to be like, you know what? Let me just put some money into crypto. And we're seeing that. You remember with crypto, what makes it so unique is there is a finite amount of these coins. There is a finite amount of Bitcoin. And by 2045 or so, there will be no more Bitcoin to be mined. And so if you look at the number of millionaires there are in the United States or just around the world, if you were to take that number and compare it to the number of Bitcoin that are in circulation, there still isn't enough Bitcoin for even a millionaire to buy one Bitcoin. And now you throw in the large institutions like the banks, like MicroStrategy, like Tesla, like PayPal, like Apple, which are working on or are entering the crypto space, IBM, Intel, then it's like, okay, well, there's not enough Bitcoin to go around. And what is that going to do? That's going to eventually pump up the price of the cryptocurrency. And on top of that, as you know, Kerry, I'm still somewhat involved in the newsletter, the investment newsletter space, the financial newsletter space. And until that space abandons crypto, which they have not, and they're still pumping it up. And I think they're going to continue to do it until they leave because they can move markets. I mean, they have millions of subscribers worldwide. So if they are for it, if Wall Street is for it, if Silicon Valley is for it, which all three are now on board, I'm still very, very bullish, long term. I'm not talking about making a killing overnight or within a year. I'm talking a 5 to 10 year time horizon.
Yeah, well, I agree with you that you can make money in it. I don't know why we need 10,000 cryptocurrencies. They're not currencies, all right? That's a misnomer. At best, they're an asset class, right? They're not a currency. You can't go into Starbucks and buy a latte with your digital wallet. And while Bitcoin limits the number of coins, many of them do not. And then they turn into Ponzi schemes. And, you know, like during the Weimar Republic in Germany, you needed a wheelbarrow to carry all of your currency to go buy a loaf of bread. And then the guy comes out, the story is, he puts his wheelbarrow out, finds out the price of bread, and then he comes out and the money's all over the sidewalk, but the wheelbarrow's gone. You might just need, if they keep going on some of these things, a digital wheelbarrow, because there's no limit to what can be produced, like Dogecoin, which has no real reason for existing other than Elon Musk said it should.
Well, you bring up a good point, and this takes us back to the .com bubble. So I was just a young kid when that happened. I didn't follow it, but I heard the stories, and people like the current crypto mania were buying companies that they had never heard of. If something had anything.com or sounded like a tech name, they would just invest blindly, and they ended up losing everything. But what came out of that .com bubble? Amazon, Facebook. Well, Facebook wasn't a part of it, but the idea came out of it. At eBay, there were some companies that came out of it and thrived as a result. So I think that's what's going to happen with crypto. I think, like you said, there are a lot of scams. There's a lot of junk out there. Dogecoin being one of them. The founder of Dogecoin even said, like, yeah, it was a joke. Not junk, but it was a joke. This is a
bad joke. Bad joke at that,
And because of Elon Musk, it's been going up. And I'd say, hey, this is going to be one of those currencies that's going to be like those no-name.com stocks from 99, 2000. So, have fun while you're at it, but sell it before it crashes. So I do think Bitcoin, I do think Ethereum and a few others are going to come out on top, but the rest of the thousands that you talked about, they're going to be worthless.
And they are worthless. It's just, it's kind of like a weekend at Bernie's, the crypto space, right? It's like, Bernie's dead and everybody knows it, but nobody wants to admit it. And I know you got to get going. We'll kind of leave it at that. So I'm not so sure about the inflationary front. There's nothing, everything in life is transitory, right? The best things in life are transitory. And, we'll see about transitory inflation. I'm not convinced, because I think if the inflation goes away, so does the potential growth. The Federal Reserve's not going to allow it. And we're heading down a sinkhole, but I hope you're right and I am wrong. And Naresh, just tell us where we find you and how to connect with you these days.
NareshVissa.com, also my online and digital marketing agency, Krish Media Marketing. Website is Krish, Krish, mediamarketing.com. And I've written several books on online and digital business. Just go on Amazon, type in my name, Naresh Vissa, and you'll be able to find all those books.
All right. Well, we appreciate it. You got a question for Naresh? Send me an email, kl@kerrylutz.com. Tell us your thoughts, inflation, economic forecast, and real estate, etc. Let's see what happens, and sign up for our free newsletter, financialsurvivalnetwork.com. Naresh, always a pleasure, and let's see what 2022 will bring.
Thanks a lot, Kerry. It's been a very enlightening discussion. It would be fun to come back at the end of 2022 and see how things played out.
I'll put it on my calendar. Take care, Naresh.
All the best.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.